Hi guys, and welcome back to another instalment of the Zenfinex February 2021 forecast. And today I'm going to be analysing the GBPUSD market, which has broken a key structure on all time frames as the dollar continues its rather surprising bullish run. However, we do have some really important fundamental news in the Bank of England monetary policy report, followed by the official bank rate. And in the US, we have just a small matter of unemployment claims and non-farm payroll days, so it's a really busy one. Now, these news events are actually likely to shape the outcome of the price action in this market for February. Okay, so let's look at the fundamentals from a sterling perspective first. And at the time of recording this video, we're just a few hours away from the Bank of England interest rates and monetary policy report. Now, the sterling will be watched very closely as investors try to measure the likelihood of negative interest rates, but the Bank of England is not expected to change the interest rates or quantitative easing at this meeting. So unless you're going to be reading the report, then I would sit out of trading because the sellers are likely to move in on impulse if negative interest rates are mentioned. And the reason I say this is because negative interest rates will mean that foreign investors earn a lower return, which leads to lower demand for the pound, devaluing the currency, and as I said, we could see those sellers moving in quite quickly. Now, in general in the UK, we are vaccinating the population at, I'd say, a really impressive rate. Now, barring any unexpected bad news surrounding the new strains, there is optimism around the UK economy, which is reflected in the recent pound strength we've seen. And then moving on to the US fundamentals, the dollar has actually traded higher this week, which is actually down to rising treasury yields because of optimism around the US economy. How long this will last is yet to be seen. Now, it's going to be a really busy couple of days on the calendar front. Now, let's start with the unemployment claims, which is out today, Thursday at 1:30 p.m. The number of individuals who filed for unemployment insurance for the first time during the past week is expected to be 828,000. An improvement on last week, but a really ugly figure still. And the fact is that this will be the first test for this dollar bull run. And the dollar cannot recover in the long term until these facts change. And I've said that before. 828,000 is still way too high, so have a look out for this figure when it's released. And we have the big event tomorrow. On the first Friday of every month, there's an employment statistics report from the previous month. It's always interesting, it's always volatile, and within this jobs report, the public has access to pivotal information on wages, job growth and unemployment. It's widely regarded as the most important piece of Forex news in the monthly calendar. It may have taken a back seat because of recent events, but it's still very important. Now, it tends to be released at 1:30 p.m. and it does send shockwaves through the Forex world. The data due tomorrow is forecast to show the US economy adding 50,000 jobs in January. Now, this will be a mild recovery from losing 140,000 jobs in the previous month as the spike in coronavirus infections curbed economic activity. But really important to listen out to this one, guys. Have a look to see how many jobs are added. If it's above or below expectation, it could really have an influence on where the dollar's going in February. Okay, so let's have a look at the chart now. And from what I've said on the fundamental side, we are, I would say, neutral to bearish. The reason I say neutral is because, yes, we do have this strong dollar strength at the moment, but we're also, I'm bullish for the sterling as well, and the Bank of England has given a rather optimistic outlook for it. So I'm a bit cautious for just selling just because the US dollar is strong. Now, I'm going to look for it, whatever I see on the chart is what I'm going to go for. Now, straight away on this daily chart, I see this key level that we're actually in at the moment, and this is the daily order block. Daily order block put in there. Now, we did have this, the reason it's this daily order block is the last piece of bearish pressure before this break to the upside, and we did break two structure highs, albeit just, so I am a bit cautious about this. Our target profits for any trades would be at these highs at TP 1.376 would be a target. Now, this is what I'm seeing on the daily chart because we are in a really clear ascending channel at the moment. So it's, unless we break down below this ascending channel and a retest, we could be looking for sells. But we'll leave that in there for the daily order block, because what we'll try and do is refine this even further. Now I've marked this break of structure still. Now price, you could argue, is stuttering along, and a drop there from the price action is evident, but we can refine this daily order block down into the 4-hour order block. If I zoom in on that, just so it's clearer. So we had this retest and then an impulse up and a break of structure. So we are looking for price really to go into this area here, and once it's in this area, which I'll just what I'll do is I'll set an alert for this level, and we're at around 1.35600. We'll call it GBPUSD 4-hour point of interest every time next week. Okay, so now I've got my alert set there. I don't need to sit and watch the charts. I just have to wait until my phone pings off from TradingView and the alert's gone off. And once that alert's gone off, I can then start to refine. Now let's do a bit of planning in the meantime. So if I go onto the 5-minute chart and I find an order block within this 4-hour order block, so a level which we can potentially buy from. So I'm looking for a clear break of structure. So we've had this level here, it didn't really break much, but if you see these highs here were broken from this level. I'll zoom right in on that so you can see it actually. This high, this 5-minute high here, was broken from either this candle or the start of the move was from that candle, or you could argue it's from that candle. Now, what I'd be looking for price to do once my alert goes off, I'll be watching this chart and I'll be looking for price somewhere over there on the right hand side to come into this level first of all. Then I want to see it break to the upside. Then I want to see a retest of what normally would be an order block left behind. And then I'd like to see another break to the upside. And this here would be my entry. Now, I have to wait for that. And the reason I'm not entering straight away is because we have this down here as well, which has been untested. So price could, on the other hand, fall all the way down into this level and test this order block. A move up to the upside, a retest, not really broken any structure yet, but then when we have this move which breaks this high, I'll be looking to enter off of the, I want to move that up a bit, the retest from here, so my entry would be at that level. So it's really simple stuff, but really powerful and really good risk reward, because if I was to get in at this level, then I'll be looking at a really nice risk reward ratio. So we know price, our target from before was 336.70. So if I put in a long position there, if we were to get in around this level, 6.2 pips, and we're looking at around 17, 18 our trade if you was to hold all the way to the highs. So that's what I'm seeing at the moment. That's where I'm looking for potential buy opportunities. And I'll just delete this because got my alert set in so I can wait. Now let's have a look. I'm on the 1-hour chart at the moment still. This is our 4-hour order block. Now let's have a look at some indicators. Have a look at the moving average just briefly. So we had this cross at around 3648, so we have opened up room for downside, which is good because I do want it to test this level here. And then, as we said, we'll be looking for buyers. And we may even see another cross around this level, which would be added confluence. But other than that, guys, I'm not seeing any selling opportunities. Let me just quickly try. Okay, so if we're wanting to catch the trend right now, we had this low here, which is broken during the Asia session. Now what we could see is price come back up to test this level, but it would mean a cross on the moving average indicator, and then selling down into our favoured order block, which we're looking to buy from. So that is some more counter trend stuff, because there is no evidence at the moment, especially on the daily time frame, that we've broken the structure, which would mean we're selling. We are seeing evidence of a trend shift though, so really important times at the moment. I'm sure the fundamentals from the NFP, non-farm payroll day tomorrow, unemployment claims, interest rate decision is going to really shape the outcome of this. So if you like this video, guys, make sure you turn on your notifications so you never miss an update. As soon as we send out a video, it will come straight to you. You can message me on the Instagram above if you have any comments, or just drop it in the comments section. But please keep liking and subscribing to these videos, guys, and I'll keep putting out this great content. So have a great week, everyone. I'll catch you all next week for the next video.
Thank you.